But we're beginning today's show with what's making news in the markets. The November WASDE report reduced expected yields for both corn and soybeans. Corn was dropped by 215 million bushels, and the production estimate for soybeans was lowered by 98 million bushels. Iowa State University ag economist Chad Hart joined me this week for a deeper dive into the report and where the markets may go from here. First, though, I get an update on harvest and crop conditions in Iowa after what has proven to be a challenging year with the weather.
The end result is actually that the crops came out quicker than usual, but that was because you can think of the combination of the derecho forced us to look at those crops earlier. The drought here forced those crops to mature earlier, and so we got an early jump start, and basically that's held completely through now. So as we look at corn and soybean harvest here in the state of Iowa, we are basically done. I think it's 94% on the corn side, 98% on the soybean side. So from that perspective, it was early. The issue with early, though, is that, farmers continue to report that this crop actually was drier than they expected. And so we've had some problems, for example, with bean shatter because it got that dry out there in the field. So even though we were moving through more quickly, you face still the dryness in that crop, not only creating problems in harvesting it, but also leading to problems as far as, fewer bushels out there just not having the moisture content that a normal crop would.
And I'd also like to get your thoughts on the November WASDE from this week. So given the recent strength of export sales for corn and soybeans, lower estimates of ending stocks for both were anticipated. So explain to us what we saw.
We definitely did see those lower ending stocks, and it came in a variety of ways. For example, when you look at soybeans, where USDA had already posted sort of a strong export number, the only adjustment we actually saw from the November WASDE report was on the yield side. But that was enough to pull production down 100 million bushels and to put that ending stock level at 190 million as we look out there to the next August. So you're talking about a stocks to use ratio that's now being projected at less than 5%, really tightening up those numbers as we're looking at the soybean market. For corn, it was the combination of we saw that lower production number coming in on top of a really strong export number. In fact, USDA moving to a record projection in terms of corn exports out there. The combination of the supply downgrade and the boost in exports lowered those ending stocks by roughly 500 million bushels. And so you're talking about ending stock levels of 1.7 billion as we look out there to the next August, the lowest we've been since, I believe, 2013, 2014.
Do you expect any major changes with these USDA numbers when they're finalized in January?
I think we'll maybe see some smaller adjustments out there, but I think they've really put in the big adjustments now. And like I say, with states like Iowa running ahead in terms of those harvest percentages here, this makes these November numbers fairly solid as we look forward to January.
For this next question, not asking you to get political here, but wanted to get in a word about the recent presidential election. Any guesses as to how agriculture is going to look under a Biden presidency? And this could be related to markets, ag regulations, trade, any of that.
Well, I think when we look here, with a possible Biden presidency here, we can just fall back to sort of where we were at 4 years ago and look at the lay of the land in agriculture back then. I think we could expect to see a President Biden look to be more, I guess I'll call it multinational when it comes to like trade agreements, for example. So looking to rejoin, for example, the Trans-Pacific Partnership, or looking to build more multinational trade negotiations and agreements there. We could also definitely expect to see more regulation, especially when it comes to the environmental side of the marketplace. And, in this case, I'll say for the biofuels, I would expect, let's call it more consistency when it comes back to, for example, the small refinery waivers. When you think about that issue within biofuels, that was really something that cropped up here during the Trump administration that wasn't a problem back under the Obama/Biden administration. And so I think we'll see a return back towards that more, let's call it stable biofuels policy.
And Chad, we'll end it today with any marketing or risk management advice that you'd like to leave us with as we move through November.
Yep. And so, 2020 has been that sort of upside down year where we've seen, our price movements have basically been the opposite of what seasonal pricing patterns normally are. The spring highs became the spring lows this year. And here where we're sitting normally at the harvest lows, we're actually seeing the harvest highs. But what this gives crop farmers especially an opportunity to do here is lock in some price protection at a time when they're not used to seeing it out there. And in fact, with the strength that we've seen in the marketplace over the past couple of months, where we do have corn prices on the board over $4 a bushel, where we do have bean prices that are over $11 a bushel on the board, it definitely lends itself an opportunity for folks to at least put in some price floors, whether they're going to do this through hedging or using options out there, and especially if they're thinking about storing this crop into the springtime. Right now, we're seeing that growth. Exports are really driving it. But I would say there's a lot of uncertainty coming along with that as well. So anytime that I can lock in a price floor at a really good price and hope for continued price improvement, it's always good to have that, let's call it insurance or security blanket that can be provided at a time when you're not normally thinking of putting in those price floors. Harvest time is usually where we know, okay, we're at the low point. Here we're not. We're at some of the best prices, if not the best prices we've seen all year.